Oh man, welcome back to another market open live stream. We've got Bitcoin sitting pretty above $85,000. Are we now on track to get 90k back this week? Loads going on the market. We've got an opening volatile situation going on in the traditional markets. Can we set ourselves up for a positive day today, which can lead us to get a very important 4-hourly candle close? I'm going to break down exactly what I'm seeing in the charts, altcoins, and a lot more. Do jump into the chat, guys. This is a live stream. I do want your interaction, so do jump into the chat. Let me know what you're thinking about the market. Let's chill, watch the markets together, and see how the day progresses. Cool. All right, so let's kick off with Bitcoin, right? The good news here over Bitcoin through the night, as I left you guys, was that we got some good 4-hourly candles. We got a good 1% on this 4-hourly candle, and then this one in particular I want you to focus on was a really important 4-hourly candle because the candle close was the highest one we had. So technically, if you take into account just the candle closes, we have a higher high from this level here. So we went up here, came down, have gone up, and we've got a higher high now, which is fantastic. Now, of course, on this candle, we did wick to 86,092. I would like to see us touch above that, right? We've only gone as high as 85,997, which means that 86,000 is acting as resistance. So we got a little bit of work to do here, but hopefully in the next 1 or 2 4-hourly candles here, we can get some momentum to break beyond that, because once we do, guys, things look pretty exciting. You've got a bit of resistance at the next pivot point, which we wicked up here to 88.5. But then after, remember, we're breaking out of this big downward trend. And when you break out from a downward trend, what's your price target? Your price target for this kind of move is the top of the wedge, which takes us back to all-time highs at 110. We've got a pivot point here at 99. You've got this pivot point here at 94. And then you've got the one here at 90,000, which is our first level to visit, will be that 90,000 level. And that could be as soon as this week, right? If we get some good 4-hourly candles here over the next, over today or even tomorrow, we could really be quickly progressing up towards 90,000. And again, this is a nice strong area of support we've just bounced from. This level here is a good area of support. We've tested the previous all-time high, which we've broken out from. I mean, you can even see the white line that I've got drawn. You're gonna have to ignore all these lines, but look at that white line I've got drawn, which dates back to the peaks of 64,000, 69,000. It's a nice retest of this trend to then bounce onwards, right? So this is a really nice area for Bitcoin, some nice strength. I mean, it'd be silly for us to not mention the wider markets and understand that there's still a lot of risk in this market. But this is a good risk to reward level. And you can see bulls are stepping in at this level. Last week, 6.85% up. This week, 2.4% so far. But more importantly, it's a confirmation candle, right? It confirms that there was a reversal last week because that was a bullish engulfing candle. So when you open up with another weekly candle thereafter, that's a good sign. So that's our technicals. The technicals are looking strong. Now we switch to the fundamentals to see if it marries up. And we need to just have a good week. So far, it's been okay. Can we build on it? At the moment, we got US stock futures today a little bit tentative. I mean, let's just tell you what happened in Asia. Asia was okay. The Australian index was relatively flat. Nikkei in Japan put on 0.8%. The Nifty 50 in India went up 2%. Hong Kong was relatively flat, as was Shanghai. Coming into Europe, you saw the DAX do okay with 1%. The FTSE, the UK market, close to 1% up. CAC relatively flat, and the Stocks 600 up 1%. So, typically we've seen this pattern over the last week or so, which is where you're seeing traditional markets in Europe and Asia tend to rotate green, but then as soon as the US market opens up, even if the US pre-market is green, we've seen that the US market tended to give that up later in the day. So yesterday we did see that. In the end, the traditional markets ended up green, but they started off much more green in the pre-market and then kind of gave it away intraday, like you're seeing. The actual trading hours was a red candlestick on both the S&P and the Nasdaq yesterday. It's just highlighting to us that there's a little bit of nervousness left in the market, particularly to do with some of the US government bonds as well. Let's listen into some of these suits.
Here. Look, I think fluid is the key word in terms of the situation, because there's a lot that we just don't know. And that's why you had such a strong market reaction when the tariffs were announced, because they were a lot more than had been anticipated. The big outstanding question is the tax package. So the consumer has been driving a large part of the US economy. We know it's been the top 10% of consumers that have really been spending. And so if you're going to hit the consumer with higher prices, the risk is that if you don't have an offsetting tax package, that really causes them to pull back. And frankly, we're more concerned about growth than inflation as a result of tariffs.
Right. And the administration has teased that, taxes, something on taxes might be coming in the second half, but certainly feels far away at this moment.
Also, that's just an extension, right, of what we already have. That's not a tax cut.
Something on taxes. Yeah. Sinead, you're sticking with us through the opening bell. A really interesting note that you made on positioning there. And you have to wonder, if everyone is rushing to one side of the boat, maybe you want to get on the other side. Maybe it could be skewed as a bullish signal there. But we're going to discuss all of that and more with Sinead coming up at the opening bell. Your setup heading into the ringing. You can see the S&P 500 pretty much unchanged. It's been there for a couple hours now. The NASDAQ 100 trying to build on some of the momentum it's picked up.
Just to jump onto here to Trump's Truth Social, we do get this tweet from him an hour ago. Nvidia commits to $500 billion to build AI supercomputers, plus in the United States exclusively. This is a very big and exciting news. All necessary permits will be expedited and quickly delivered to Nvidia, as they will to all companies committing to be part of the golden age of America. Now, look. Here's the thing that people aren't really talking about. Let me give you a little bit of insight. In fact, there was a survey on this. I think CNBC did it, but I'll give you the highlights. Basically, look, we said yesterday that Trump will obviously take care of his friends, right? If it's Tesla, if it's Nvidia, if it's Apple, he's not going to ruin some of the US's biggest global companies, right? He's not, right? He's going to make sure he takes care of them, whether it's some exemptions, whether it's partnerships, whether it's expediting some of their bureaucracy and making sure it's easy for them to build what they want to build. He's going to take care of them. Right? The problem is, what about the average businessman? What about the average CEO? What about smaller companies? What about traditional businesses? And the surveys show that most of them, those CEOs, will not commit to onshoring production in the US because costs are too high. Costs are too high. It's too prohibitive to do so. The bureaucracy, the time it takes. So far, that is the stance CEOs are taking. So whilst it's fine for Trump to share headlines like that, and I'm sure that's good news that Nvidia is doing that, it's not going to be representative of all the businesses. So when Trump and his team come out and says, yeah, we're going to onshore production and businesses are going to build again, America's going to be great again, everyone's going to build factories here, it's not that easy to tell a company that's got a factory in China or Vietnam or Thailand or something and tell them to just come and build in Texas, right? It's not cheap. It's not cheap. The labor laws are different. The environmental laws are different. The time it takes to do things are different. Things just move slower. And that's not going to change in one administration, right? That's more of a long-term plan. So that's something we have to understand and add into when we're factoring in how quickly we can go. Now, quick update on A lot of you guys were asking me about what's going with This is a project I had some money invested in and got wrecked in yesterday. We got an update from their CEO, JP Mullen. Remember, this was a $6 billion project, which pretty much went to nothing, down 90% plus in like an hour or 2 hour candlestick. Like horrible, horrible, horrible. The team and the CEO maintain it's not a rug pull and that they didn't sell any stocks, any of their tokens. They are firmly blaming an exchange, which is crazy. They're not naming the exchange. I think I know which exchange it is. We won't name it for whatever reason. But they think it's the exchange. And they're saying that the exchange forcefully liquidated a multi-$100 million position in leading to the cascading liquidations we saw in the chart. For those who haven't seen it very quickly, this is the chart you're looking at. It is incidentally up 43% today, but I just want to show you the candlestick that you saw on Sunday, a painful 83% day. Yesterday was down another 40%. It's just horrible. It's just a horrible chart to look at, particularly if you had money invested in this project. Okay, let's take a look at the latest update from JP Money. He says the following: he appreciates all the support. Fine. As I've shared in interviews, will continue to do so. Mantra is a project that has survived and operated for multiple market cycles. Okay. To the community, you have believed. Okay. To our long-term investors, Sharuk and Laser Digital, we're incredibly grateful for the support. Okay, great. Within the next 24 hours, we'll be sharing a post-mortem. Okay, great. After the post-mortem is released, we will share additional information on an OM token buyback program, as well as OM supply burn program to reinstall trust in the market and show our commitment. So that's something we'll have to kind of factor in. Maybe that's why you're seeing some buoyancy in the on price, people being speculative now, trying to jump in to take advantage of this. And I don't know how they're going to do it. I don't know how they're going to manufacture a clever token buyback along with a burn that's going to, reinstill trust like they say. It's a tricky one. What are they going to do? I mean, there's so many people now vulturing around this project, buying in today to look for this quick buck. How do you reward the people who bought and held through this process? Remember with Terra Luna, when they spun out and forked into Terra Luna Classic, and they took a snapshot of who held Luna before the crash. Fine, maybe you could do something like that, but it's not going to be as straightforward as people may think. To our team at Mantra, tremendous hustle, drive, and focus you have shown has been exceptional, blah, 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 blah. We will do everything in our power to convey accurate, timely information. Further, we will do our best in this trying time to be available to you. Yeah. Okay, cool. Nothing of substance just yet. But I guess the fact that they're working on token burn / buyback probably will be seen as a positive to some market participants. Opening bell here now, markets open up. You can see here we've got a bunch of green, which is nice, some red as well. Market's pretty tentative, right? But again, like anything, the close has not been the same as the open in the last few days. Yesterday we opened up pretty green, ended up pretty red. Here we're about, I'd say 2/3 green here on that grid there that you're looking at. Let's see how the day plays out throughout the remainder. Take a look at altcoins. Let's get a quick scan of our crypto bubbles. Let me show you that 1 second. There we go. And again, OM kind of up, IP kind of bouncing after its horrible collapse as well. Sorry, not IP, Pi, right? We've got Pi here as well, down 9%. Apart from that, not much going on. If anything, a little bit of red starting to creep into the market. Bitcoin is up 1%. All coins aren't really following it, and that's why Bitcoin dominance continues to climb here. 64% in focus here for Bitcoin dominance, which is, getting to levels we've not seen. When is that? Let's go back. I'll get this for you. We've not seen 64 properly. That's a wick. I'll ignore the wick. We've not seen 64 properly since February 2021. Okay, so February 2021 is the last time, and that was on the way down. The last time we saw 64 on the ascendancy, we saw it here, which is December of 2020, and then eventually it went to its high of 70% high it touched in that cycle. Well, it went higher than that. 73 it wicked to eventually, which was the high of that cycle. So the question is going to be, are we now going to be working our way to our high of the cycle for Bitcoin dominance, right? Because remember, we have that, then you eventually have your altcoin season. Are we now getting to our high eventually before getting to our altcoin season and then eventually bear market, right? And this is something that happened last time. If you take a look at it last time, you had your 2020 halving. You touched a peak of Bitcoin dominance, like I told you, in December 2020. And then things got pretty nasty, right? Bitcoin thereafter, if we go back to the Bitcoin chart from December 2020, December 2020, you have you then have your big move, right? And the move kind of finishes by April. So things happen pretty quickly. So from December to April, call it 4 months, you touch your peak on dominance, you get to your high on Bitcoin, including the altcoin season within that 4 months. And then you're on your descendancy where crypto went down in the summer to 69 and then later in the year to 29, then later in the year went up to 69. So the argument you can make here is kind of we're topping out here on Bitcoin dominance. Will we get an explosive move onto Bitcoin to hit the top of this cycle? Maybe 150, maybe 160, whatever it is. And altcoins will go crazy with it. And then you'll start your way down. Then you'll start your journey down into a bear market, and we'll have to wait for the next cycle. Timing-wise, if you look at it, this happened a decent period after the halving, right? The halving was in May, and the peak came in December. So 7 months. If you look at this here, our halving happened in April of 2024. Already we're a year in, right? So we're past the timing of the previous cycle. By now, in the previous cycle, we'd pretty much started, we were done, and we're pretty much heading into our bear market, which is why a lot of people are getting a little bit concerned here about crypto. Of course, you do have your narrative around whether you could have a super cycle, right? Do we need to continue to obey this bull market, bear market? Can we not just have this kind of super cycle that just continues here on crypto? Again, maybe our kind of, we'll get less powerful bull markets, but we'll get longer drawn out ones because the tension's so much more. You've got major countries interested in crypto and Bitcoin. You've got spot ETFs now. So yeah, not every cycle is going to be created the same, particularly as the asset class matures. Sonic sitting at 50 cents, up 3% here today. Kind of trending downwards here on this little triangle that we can see. You can probably draw this as a little bit of a consolidation there, but you are getting your higher highs as well, which is good. So let's just pop those in, kind of forming a little bit of a triangle, if I may say so. Something like that is what I'm seeing in the charts. You can tidy that up a little bit. There you go. There you go. Cool. So that's the kind of consolidation you're getting here on Sonic. But ultimately, the technicals are fine. It just relies on Bitcoin. If Bitcoin moves and moves strongly, all coins will follow suit as well. Any other performers to mention? Radium on Solana looking strong, up 7%. Now at price points higher than you saw. Sorry, that's the hourly chart. Let me just look at the daily chart. Yep, trying to just break this kind of resistance, right? This is its bottom pattern. If it can break out of this rectangle pattern, let's just draw that for you here. Let's just draw this here. If it can break out of this rectangle pattern, it can start to fill that gap quite quickly up to some of these levels. Because really, from 4.2, it fell quite dramatically. So that could be quite a nice, position to take, a good risk to reward to get you up to that $4 level, be 100x or a doubling of your money just to get back to that 4.2 level here on Radium. So that's looking quite nice. Zen is up 5.4%. Coty Blast from the past is up 8%, but still sitting at 6 cents, which is incredibly crazy. And again, this is a project that I did like at one point, and then I made a video saying I've changed my mind, I don't like it anymore, in full transparency. And this project, at one point was as high as 26 cents, now sitting at 6 cents. So yeah, one which is struggling for sure. What else is moving in the charts of interest? PHB is moving 5.3%. That's it really, not too much going on there. Let's check liquidation. It's always good to check our good friends in the liquidation charts. Last 24 hours saw another 200 million roughly liquidated. Again, split quite fairly, right? Longs were 110 million of that, 80 million of that were shorts. So you do have a bias, a slight bias if you look at the long short ratio. Just slightly more positioned in the long position is the market. Let's take a look at the liquidation heat map as well. Always good to look at this. Let's notch it up to the 3-month view, which I like to use. And you can start to see that liquidity is building up here. Let me just move this so you can see it. Just here. This level here at this kind of 90,000 level is an obvious level, which is why I think we could see it pretty quickly, because I think the market makers will be tempted to grab the billions of dollars of liquidity up at this level, right? They'd want to take that liquidity. And then the bigger question, which will take longer, it's not going to happen necessarily right away, is it's going to want to grab the liquidity to 100 and then the all-time high, right? You can see this dark yellow colored level here at 110. It's a natural level to grab that liquidity. Problem is, as you start to grab liquidity in the up direction, liquidity grabs from below, because let's say, for example, you get to 90 to grab that liquidity, people start shorting from that 90. So the liquidity starts to again build up around the 80 level. So then market makers may want to come back down to 80 to grab that liquidity. And that's how this game just continues with volatile candlesticks. But definitely more appealing to the upside right now, given the pullback we've already had down to that kind of 74 level. I think the bias is this 90,000. I wouldn't be surprised if market makers wouldn't want to push for that to grab that liquidity there. Let's listen into the suits.
Yeah. Wow. But he's so rich, I guess. When you're rich, you can say
year
whatever
over
you
year
want.
in the fourth quarter. They 5% year over year decline in the first quarter of 25. Greater contraction in Chinese demand worldwide. Not a big surprise, but also the Chinese going to Japan where they were buying a lot of things, and that slowed as well. Spend by U.S. nationals also softened sequentially, but only moderately in the first quarter. I'm reading here from a Morgan Stanley note as well. But generally across the board, not a great quarter for LVMH.
No.
Despite their use of the word resilient.
Right.
I did go into the LVMH store. It's their temporary store on 57th Street. It was very crowded, but it's hard to know how many people are in there just looking at it because it's beautiful, like a museum. I did see somebody with a little dog. They were buying their dog a dog collar.
Well, that just shows you everything.
Yeah, it does. They had their dog on the counter. They were fitting it for the dog collar. Thought that was interesting.
How about Louis Vuitton kicked off the season in Melbourne, designing a custom trophy case to mark the occasion? Now, there you go. That's what I want. What's the occasion per share? This was terrible.
By the way, wine and spirits, which you've been talking about a lot. I mean, it was down.
Because wine and spirits terrible. They have cognac, which is one of the absolute worst to have.
Yeah.
You have to have agave spirit. It's the only one that had growth, 6% growth.
It was down 8%.
The browns are down so badly, it's like, don't even think about it.
And this is before tariffs, right?
Before tariffs. David, I got to tell you, this was a juggernaut in good and bad times. No. Good
there is
shows
European
no
wine
resilience.
And spirits as well.
Oh, what you got there?
Huh. Interesting little story.
That's new.
Well, I'm going to look at it first and determine whether it's worthy of discussion.
Just want to come back to this story because I'm seeing quite a few tweets here that people are like, going all back in on and feeling really positive because it's up 40% today. Look, you have to understand there are opportunists that are bottom buying this thing, hoping for this stuff. So when you're buying back, which involves the team spending, let's say, treasury money to buy back tokens, people like this who are buying are going to profit from this, right? They're going to do really, really well and profit from this because they're just going to be taking advantage of this from here. But the people who bought, who were in it at, let's say, $6, $5 and kind of, have seen their investment go down from highs of $9.2 down to nothing. Those guys are at zero, right? They need all of this to kind of come up for them to see some recovery. They need to come back to some of these levels. Whereas when you look at the people who are just buying like yesterday to take advantage of the dip, of course they're making money. They're up 30%, 40% if they're putting leverage on that. They're making a killing. The problem is the original holders who like the project before all this attention came to it, those are the ones that will struggle, and it will take a monumental buyback / burn for this to recover. Can be done. I'm not saying it can't be done. It can be done. It would be monumental. And like I said, I'm holding my tokens. I'm not selling them. I mean, they went down so much that it just made no sense to sell them. So if they can pull it off, kudos to them.
Yeah.
Seen Rodney?
I have not. We still don't know. We never found out. I was sure we would ultimately find out why Mr. McMullen left the company immediately, even though it was not related to specifics having to do with the business, and we've yet to determine that. I think maybe he knows, not telling us. Look at that. Do you ever see him not say anything?
That would be news, Jim.
Look,
you're going to hold back some news?
Can't get it confirmed.
Can't get it confirmed. Good for you. Don't go with it. All right, I can't get this confirmed either, but I'm going to go with it because Reuters is reporting it and the stock's up. Hewlett-Packard Enterprises, they say Elliott's taken about $1.5 billion stake in HPE.
David,
Elliott, of course,
like
as our viewers well know, the most active of activist investors, but not always. Not always.
Man, that thing is one-way ticket.
I don't have any insight beyond this Reuters story.
Antonio Neri is an incredibly nice guy, but
pointing out that HPE, that Elliott has taken that.
Who's their number one competitor?
More than $1.5 billion. So make them one of the larger.
We'll quiz.
Say again.
Number one competitor, HPE.
Number one competitor.
Who's the most competitive person in business? Hates the.
Now, the interesting thing with the dominance, which we just covered off, is really, proving Bitcoin's strength as the reserve. remember, Bitcoin plays this kind of like dual role. During difficult times, it acts like a reserve. We've seen that during pandemic. We've seen that during other periods where it's really acted really, really strong, which is interesting. But then equally acts as clearly as a risk on asset. When markets are pumping, Bitcoin's pumping, and when the traditional markets are down, you see Bitcoin has tough days. So it has this kind of duality of a role. And right now, how you're seeing it perform, when Bitcoin's moving and the dominance is going up when Bitcoin's moving, it's because Bitcoin is acting as a kind of safe haven. And particularly right now, when you're seeing US Treasury yields go up, which means people are net, worried about the US, which is why the yields are going up and the bond prices are going down, because people aren't interested in the US bonds, relatively speaking. It's because people are worried about the US policy towards the tariffs, right? What's going on with China and the rest of it. And in that limelight, Bitcoin's acting quite strong, which is quite interesting, right? We just covered off that the dominance has hit a 4-year high, which we've not seen since 2021. Take a look at this. Let's listen to this and see what they say here.
Last month and a half, from $109,000 down to $76,000. We're recording this on Wednesday when there is
$1,000 and crash to 70.
No, they're speaking too slow. I can't listen to it. I'm not seeing a dumping of US Treasuries. Besson said the Treasury, we did this interview live yesterday, right? The Treasury has lots of tools, but we're long away from needing them. He also emphasized that enduring state of the US dollar as the world's reserve currency, despite the dollar index, which measures the dollar's value against a basket of trading partners. And that's the other thing you have to remember. If the dollar index is going down, right, which is what we can see, this means that the dollar against a basket of currencies is getting weaker. Now, equivalently, if Bitcoin USD pair is going up, it means Bitcoin is getting stronger to the US dollar. It doesn't necessarily mean that the Bitcoin part of the equation has to get stronger. It could just be that the fear in the US is making the US, the denominator of the equation, weaker. Hopefully that makes sense. So it's not necessarily that you need more net interest in Bitcoin at this moment for Bitcoin to do well. You just got people worried about the US dollar relatively to Bitcoin that leads the pair to climb higher. And I think that's why we're seeing some good strength here on Bitcoin. I mean, it's phenomenal to think that, even during this tariff kind of panic, we had a Bitcoin candle of 14.3% down to the downside. And if I switch to, let's say, the S&P, during that time, the S&P it did it in 2 candles really. So you had 1% there and you had another 9% there. That doesn't tell you the full equation because of the pre-market, but at least 13% down there. And then the Nasdaq in one candlestick was down 10% and another 13%. So we're going from the world's craziest, most volatile asset class, Bitcoin, is really starting to mature, right, and really starting to show some strength in these kind of moments to hold up. I mean, there was a time where you had that kind of a collapse and Bitcoin would have fell 30, 40, 50%, right? Because it was that crazy. Holds up a lot stronger. Of course, that comes with the more money being in the ecosystem, the Bitcoin spot ETFs, institutions holding it, who, are far less likely to dump quickly or panic quickly versus retail traders. Of course, countries now have Bitcoin strategic reserves, which are hard to sell. So the more people who are buying Bitcoin and the more holders of Bitcoin you have, these long-term holders who aren't easily wavered, the better it is for Bitcoin's price action, right? The stronger it becomes, because when you get a piece of negative news, they're not as likely to dump as quickly, which is a good sign. Okay, let's see what they're saying here.
Last moment, he said that the Fed has a lot of tools in the toolkit, right? Talked about the VIX potentially peaking. Wouldn't rule out delisting Chinese stocks. That was interesting.
I told you they should delist them.
You've been saying that for years.
The break the glass moment could have been a marriage full, I know.
You've been saying that for years.
But yes, the Chinese listing of the companies are almost all bad. I wish Hindenburg were still around. They have good opinion of the Chinese companies, and they just are traps. They're just roach mode.
Might decide, you know what, this isn't worth it. This is too expensive. We're just not going to make this product anymore. So I think that the concern, at least from the experts that I've spoken to, is that we could see drug shortages. We could see less availability of certain products. They could just decide not to make it anymore. It's not worth it for them. So branded drug makers might not be hit quite as hard, but for generic drugs, which are still mostly made in China or India, there might be more of an impact.
Guys, if you're watching on Kick, don't forget to follow, support these live streams, engage with it. As more and more people come and find these live streams, let's engage, let's bounce ideas off each other, and let's watch the markets together. That's what this is about.
Topics we just discussed and their unchanged guidance. Coming up more immediately, more tariff talk. We'll focus.
Okay, let's switch away from that.
Speaking of ads, we're going to watch one in a second. But first, let's check bonds today. Empire was a little better than expected, down 8, looking for down 13. But overall, it's come down some 40 points in the last few months. We're going to get Barkett and Lisa Cook today, 10-year 436. Stay with us.
That's what it is, Coventry, right?
How about we don't? Let's switch over to the Bitcoin chart. And I want to show you the significance of today's daily candle. I really hope we got 10 hours to this daily candle close. I really hope we continue this green candle, because this is not just any green candle. This is the green candle we've been waiting for. We spoke about it yesterday. We need this daily candle close above our EMA ribbon to reclaim, and we could be getting it today. Huge level. Doesn't mean the work is done. We'll get a little bit of, difficulty from breaking past this resistance. We spoke about that. It'll take a little bit of an effort, but closing above that daily EMA ribbon will be very important. It's something we've not done for a while. We've not been above our EMA ribbon since January, and that's a good sign to finally reverse trend, get back above it, and build some strength. So today's daily candle is no mean feat. It's a very important level. We spoke yesterday about winning those shorter time frames, and we've done that as well. We got the good bounce off the 4-hourly EMA ribbon. We created that higher high officially, which is what we can see right now with 86.4 being posted here on Bitcoin as the US markets open up. So you can see the US markets are feeling tentatively green, let's call it, but that's enough for Bitcoin to move 2%. I mean, look at this. If we go to the traditional markets here, Dow Jones is 0.46, S&P is 0.63, Nasdaq is 0.67, but Bitcoin is taking that as permission as no bad news. Good, let me get a bit of a pump in, right? So Bitcoin just, kind of just on the brakes, ready to go once things start to clear up. And as long as we don't get any silly tweets from Trump or his Treasury Secretary or Nick or any of these guys, we're looking good, right? Next major resistance is this level up here at 86.9, and then after that, like I called for, 90k this week. Very possible. That's very possible and a good realistic target, particularly once we reclaim that daily EMA ribbon. And of course, you guys have seen the weekly EMA ribbon is looking really nice now. Again, it's a long way to go for this weekly candle. It doesn't close until Sunday, so we've got the whole week pretty much here, but it's good. Last week we wicked below it. We were at fear of closing below that weekly EMA ribbon, but we got a good reversal. Trump backtracked, we got a good bounce, we closed in the green, but not just in the green, a bullish engulfing candle, which is really important, right? Eclipses this candle. And if you guys know your TA or you've taken my TA course, ijazcrypto.com/TA, you will know that this is a huge sign of a reversal. Couple that with what we're getting right now, which is a confirmation candle. And if this was a trade, I'd be long right now, right? Long with a price target of getting up to some of these levels at 104 and even 110. But of course, this is the weekly chart, and it will take a long time to play out. And there's a lot of macro elements as well. But this is really good. I mean, if you were to just, very quickly earmark it, that's your negative leg, that's your negative leg, that's your positive leg. You'd want a positive leg up here now, pushing Bitcoin to higher highs. And outside of any more stress in the global markets, which of course there will be stress which comes and goes, but as long as we can net have a positive, 6 months here on Bitcoin, I think we could be setting up for an explosive period. Particularly if we can start addressing some of these tariff concerns, if Trump can start signing deals with major nations, I think we get the green light to go on markets, to recover, to get back to some records. And you couple that with some, interest rate cuts, if we can continue to bring inflation down, and then we're really rocketing to the moon. The problem here with the inflation rate cuts is because of the tariffs being introduced, it's going to bring inflation back, right? We're going to see higher inflation numbers. The Fed are telling us that's going to be transitory, fine, but even if they are transitory, it delays our rate cuts. By this point now, we would have been pretty close to rate cuts. You saw the CPI data last week. You saw the PPI data as well last week. To all intents and purposes, we've met, the Fed's objectives of getting to that 2% rate. I think we would have been getting a cut pretty soon, and we would have started our rate cutting cycle. But now we have this unknown of the tariffs, and is it going to lead to a spike in inflation? What's the quantum of that? How much of an effect will it have? And how long will it delay those rate cuts for us to enjoy? Either way, The Fed may introduce liquidity in another way. Maybe they buy some bonds. Maybe they make it easier for banks to buy some bonds by giving them preferential rates as well. That also introduces liquidity in the market, and Bitcoin does well when liquidity is in the market. In fact, let's see if I can pull that up. I don't know if I have that indicator anymore. Here it is, liquidity index. This is your liquidity index, which is better looked at over a longer period of time. But look how explosive Bitcoin moves. I just want to overlay that so you can see it. This is when liquidity went up after the COVID pandemic. Unprecedented. Bitcoin went crazy. Since this point here, officially, liquidity started going down, right? From Q1 of 2022, for the last 3 years, liquidity has been taken out of the economy in the forms of tighter interest rates and tightening monetary policy. And yet, despite that, Bitcoin has done all right and got to record highs. Can you imagine when we start printing? Can you imagine when that green line goes this direction? I mean, it'll just be insane. That's when you're going to get those crazy moves on crypto. People are forgetting that this is happening during a tightening process, right? We've not cut rates. We've not cut rates, let alone doing quantitative easing, and yet Bitcoin went to 110 and is still sitting comfortable here, close to 86,000. Incredible strength, and I think people are forgetting the longer-term objectives here on crypto. So there you have it, guys. A green market open, Bitcoin looking relatively strong here. Got a few key battles to fight. I want to see that daily close later today above that EMA ribbon. Of course, I will be joining you for a market close live stream as well, so make sure you're following, make sure you got your notification bells on and all that good stuff. Thanks for watching, and I'll see you in the next one.